Hi everyone, this is CA Harsha. So today we are going to make a quick revision of input tax credit chapter, and this quick revision lecture is going to be relevant for CA Inter as well as CMA Inter students who are going to give their exams in May 2026 as well as June 2026 when it comes to CMA Inter exams. Okay. So without no loss of time, let us quickly start with the revision of input tax credit. So we all know that in your entire indirect taxes taxation paper, that too in indirect taxes, ITC is a very important chapter. Okay, so let us quickly try to cover the concepts of ITC in the examination point of view. Once again I am telling, this lecture is going to be purely in examination point of view. So whatever is relevant for exams, that only I am going to touch up. Okay, right. So first one, the input tax credit chapter starts with section 16. The input tax credit chapter starts with section 16 of the CGST Act. Again in section 16 subsection 1 we are discussing. 16 subsection 1, what it is saying, every registered person is entitled to take credit of input tax charge on supply of goods or services or both which are used or intended to be used in the course or furtherance of business. Simply speaking, every registered person is entitled to avail ITC if he is using or intended to use that goods or services in the course or furtherance of business. Let us assume I am a registered person. I have obtained some goods or services or both with an intention to use in the course or furtherance of business, then I can avail ITC. Okay, so now here what I have said, ITC allowed if used or intended to be used in the business. Okay, even though for intended to be used, ITC is allowed. If subsequently not used for business, ITC has to be reversed. For example, today you have purchased some goods. On that goods you have taken ITC. Why you have taken ITC? Because you know that that are intended to be used in the course or furtherance of business. Your intention of purchasing those goods was to use it in the business. That is the reason why you have availed ITC. But subsequently you have not used it for business purpose. Then you have to reverse the ITC. So the important catch here was, at the time of purchase, if you have an intention to use it in the course or furtherance of business also, you can avail the ITC. But subsequently, if you have not used it, then you have to reverse it. The linkage for this aspect will be there in section 17 subsection 5 block credit as well. There once again I will link this aspect. Okay, next one, section 16 subsection 2. Okay, so we said that 16 subsection 1 is saying that ITC can be availed. Now can every registered person can come and say that, okay, I have made these many purchases, I will avail ITC? Is it possible? No. You should possess some documents, or you should you should satisfy some conditions to avail ITC. You should have to satisfy some conditions to avail ITC. Without satisfying these conditions, you cannot avail ITC. Now what are the conditions? First one, possessing of tax paying document. You should have a tax paying document in possession. And next one, details of invoice debit note furnished by the supplier, and that should get reflected in GSTR 2B. So whatever the invoices, debit note, okay, and all on which you are about to avail ITC, that should have been furnished by the supplier and it should have get reflected in GSTR 2B. That is one condition. And another condition was, registered person has actually received the goods. You must have actually received the goods. And the other condition was, ITC communicated under section 38 has not been restricted. Whatever the ITC get reflected in your GSTR 2B, that ITC should not be restricted. Okay. And the other condition was, tax actually paid to the government. Whatever the tax you as a recipient had paid to the supplier, that should have actually been gone to the government. And the last condition was, to avail ITC, recipient must file GSTR 3B. There are total 6 conditions. Let us discuss these conditions detailedly in exam point of view. Okay. So first one, to avail ITC, you should have tax paying documents in your possession. Now what are these tax paying documents? First one, invoice or revised invoice, debit note, bill of entry in case of imports, an invoice issued by ISD, that is input service distributor, and invoice issued by recipient, that is RCM. Self invoice also will be there now. On the basis of self invoice also you can avail ITC. Simply speaking, invoice and debit note are there. However, invoice and debit note will not cover all the scenarios. Sometimes on imports, whenever you are importing, you will pay IGST. Whatever the IGST you have paid, on that you can avail ITC. But for that, to avail ITC, there should be a supporting document. Now in that scenario, what should be the supporting document? Bill of entry will be the supporting document. And also common services will be there. Common services which the HO had taken, and that common services has been used for all the branches. Now in such scenario, what they have to do, ISD should have to take that credit, and ISD should have to distribute that credit to all the branches. Now in such scenario, to avail ITC, again there should be a tax paying document. Now what will be the tax paying document in this scenario? ISD whenever distributing ITC to the branches, whenever it is distributing ITC to the branches, it will issue an invoice. That we'll call it as ISD invoice. That ISD invoice is also a tax paying document. That also you can use as a tax paying document to avail ITC. And the other one was self invoice. Okay, so these are the 5 tax paying documents which was given. Next one, details of invoice debit note furnished by the supplier. So this should have to be get reflected in GSTR 2B. To avail ITC, first condition was you should have tax paying document in position. What is tax paying what are those tax paying documents and all we have just now seen. And the other condition was the details of invoice debit note should have been furnished by the supplier, and it should have get reflected in GSTR 2B. Now how it will get reflected in GSTR 2B? If supplier had filed GSTR 1. Supplier filing GSTR 1 is also not sufficient. In that supplier should have to enter the invoice details. Enter the invoice details for which the recipient, for the respective invoice with which the supplier had done transaction with the recipient. That invoice detail should have to be entered by the supplier in GSTR 1. So once it is entered in GSTR 1, it will get reflected in GSTR 2B. Now IFF concept is also is there in invoice furnishing facility. IFF concept is applicable in case of QRMP scheme. Already we have discussed it detailedly in the regular class. So whenever I am doing the tax payment chapter revision, payment of taxes chapter revision, once again I will discuss this aspect detailedly. Now simply speaking, the other condition was the details of invoice or debit note furnished by the supplier should have been get reflected in GSTR 2B. That is another condition to avail ITC. So ITC cannot be availed if it is not reflected in GSTR 2B. Okay. Now reflection in 2B is not required for what invoices? See, in what scenarios it is not required? IGST paid on imports, ISD credit, RCM invoices. See, IGST paid on imports. IGST paid, whatever the IGST you have paid, you are not paying to any supplier. You are directly paying to the government. Okay, so thereby there will not be any supporting. It will not. Sorry, thereby it cannot. You cannot expect that to be reflected in GSTR 2B. Similarly, ISD credit also will not be available in GSTR 2B, and RCM self invoices also will not be reflected in 2B. So as the above cannot be filed through returns under section 37, the relaxation is provided. Okay, so IGST paid on imports, ISD credit and RCM invoices need not to be reflected in 2B to avail ITC. These three, even though not reflected in 2B also, recipient can still avail ITC. Okay, next one. Registered person actually received the goods or services. Recipient had registered person has actually received the goods or services. So without actually receiving the goods or services, you cannot avail ITC. However, there is an exception to that. Now this exception point is bill to ship to model. Now what is this bill to ship to model? In bill to ship to model, billing will be done to one person and shipping will be done to another person. Look at this example. There are two transactions, transaction 1 and transaction 2. Transaction 1 is happening between B and C. Transaction 2 is again happening between B and A. Okay. Now A is in Hyderabad, B is in Bangalore and C is also in Hyderabad. Now look at the transaction 1. C is purchasing goods from B. C wants to purchase goods from B. But B doesn't have, with B currently there is no any stock. So what B had done, B had placed an order with A. B had placed an order with A. Now A is in Hyderabad, B is in Bangalore, C is in Hyderabad. No, B to what is the ultimate objective of B doing this transaction? B want to supply these goods to C. Now instead of B bringing the goods from Hyderabad to Bangalore and again sending it to C in Hyderabad, what B can do? B can ask A to send the goods directly to C. Now in that scenario, A will issue the invoice in the name of B. A will issue invoice in the name of B. But the goods will be delivered to C. So billing is done in the name of B, but shipment is done to C. This is what bill to ship to model. Now in this bill to ship to model, now actually who is eligible to avail ITC? B is eligible to avail ITC. Okay. For the transaction between A and B. For the transaction between A and B, A is the supplier, B is the recipient. B is eligible to avail ITC. Now tax paying, what are the conditions? Just now we have discussed. First one is tax paying document. Obviously A will issue invoice in the name of B. So tax paying document is there with me. Now what is the other condition? It should get reflected in 2B. Okay, it will get reflected in 2B. But the third condition, what it is saying? Actually received. Registered person has actually received the goods. Now in this scenario, in my example, is B actually receiving the goods? No. B had asked A to send the goods to C. No, B had not received the goods. But however, what the exception in this point is saying that in case of bill to ship to model, even though recipient is not receiving the goods, recipient is eligible to avail ITC. Okay, because it is a bill to ship to model. Okay, right. So already I have given an explanation here so that you can simply go through it. Next one, goods, other scenarios where actually receipt of goods not required to avail ITC. What are the another two conditions? Goods are directly sent to job works place. Sometimes no registered person will purchase the goods, but he will immediately send that goods to a job worker to get some job work done on that. Okay, and also goods received in installments or lots, ITC can be availed only if the last lot is received. I am receiving the goods in 4 lots. Okay, so when I should consider that this point of the goods have been actually received condition has been satisfied? Until you receive the last installment, you cannot consider that the condition was satisfied. Okay, so technically you can avail ITC only after receiving the last lot. Okay, I hope this is clear. Next one, ITC communicated under section 38 has not been restricted. Okay, so if you observe here GSTR 2B consists of whatever the ITC you are eligible. I mean, supplier will file GSTR 1. Based on the GSTR 1s filed by the supplier, GSTR 2B will be generated. In GSTR 2B, total ITC will be there. Now this ITC again has been classified into 2 categories. Okay, so GSTR 2B contains inward supplies on which ITC is available to the recipient, inward supplies on which ITC cannot be availed wholly or partly because of the supplier's mistake, So whatever the ITC is getting reflected in 2B, that is again divided into 2 categories. First category, ITC completely available. Second category, ITC wholly or partly not available because of the supplier's mistake, not because of the recipient mistake. Now what are that scenario? First one, now supplier is a new registrant. Next one, supplier had defaulted in payment of tax. Supplier output tax payable in GSTR 1 is greater than GSTR 3B. This is a violation of rule 88C. Ideally, your tax liability in GSTR 1 and GSTR 3B should be equal. Okay, the tax liability which you are disclosing in GSTR 1 is more, but what you have actually paid in 3B is less. So this is violation of rule 88C. Now, you being a recipient, you have purchased goods from a supplier and that supplier ka GSTR 1 tax liability is greater than what you had actually paid in GSTR 3B. Then there is a risk of your ITC will become partially or wholly ineligible in GSTR 2B. Okay, next one, ITC availed in 3B is more than 2B. So you cannot avail ITC more than what was reflected in 2B. But if your supplier, I repeat, but if your supplier had availed ITC more than what it was reflected in his 2B, No, in his 2B it was only 1 lakh, but he had availed 1,10,000. Okay, in such scenario, as you have purchased goods or services from that supplier, there is a risk of your ITC being not becoming ineligible. Okay, your ITC become ineligible. There is that risk also. Next scenario, has utilized more ITC than what is allowed in Rule 86B. Now, Rule 86B. No, what Rule 86B is saying, that Rule 86B is putting restrictions on 100% payment of tax by utilizing ITC. Okay, if your turnover is more than 6 crores, if your turnover is more than 6 crores, you can't pay your entire tax liability. You can't pay your entire tax liability with ITC itself. You have to definitely restrict your ITC utilization to 99%. 1% you have to pay in cash. However, there are some exceptions for Rule 86B that we will cover detail in the next coming in this same video, but in the coming timestamps. There I will discuss. Now, if you are violating Rule 86B, for example, there is a supplier, that supplier had violated Rule 86B. From that supplier you have procured goods. Now, in such scenario, what happened? Your ITC will be restricted, or your ITC in GSTR 2B. See, that ITC will be reflected in 2B, but in 2B I said no, your ITC will be classified into 2 categories. So, on which recipient is eligible, on other scenario where partially or wholly recipient is not eligible. It may go into not eligible scenario. Okay, na? So the other one was such other persons as may be notified. So simply speaking, what to summarize this point, what it is saying was, to avail ITC, it should get reflected in 2B. That is one point we have already learned. But in 2B also, again, there are 2 scenarios. One is inward supplies on which ITC is available to the recipient. Other scenario was ITC cannot be availed wholly or partly. Because why I cannot avail? Because your supplier had done these mistakes. Your supplier had done any of this mistake. If supplier had done, then your ITC in GSTR 2B will be shown under not eligible category. You cannot avail ITC. I hope this is clear. Next one. Tax actually paid to the government. One of the other condition to avail ITC was, whatever the tax you have paid to the supplier, that should have been actually paid to the government. Okay, so the recipient can avail ITC if supplier has filed GSTR 1. However, if supplier fails to file GSTR 3B for the corresponding tax period by 30th September of following financial year, then recipient has to reverse the ITC by 30th November. For example, financial year 24-25 related, okay, 24-25 financial year 24-25 related ITC, related tax. For example, in September month there is a supply. September 24 there was a supply happened, that was shown by the supplier in GSTR 1. So the moment it is shown in GSTR 1, it will get reflected in your GSTR 2B and you will avail ITC. But what the supplier had done, supplier didn't file GSTR 3B. GSTR 3B was not filed. Okay. Now, if 3B not filed, can I say that the supplier had paid tax to the government? No, supplier had not paid the tax. Now, what is the maximum time allowed for the supplier to pay this tax? September. So, this is for 24-25, no? So, maximum time allowed was 30th September 2025. For September 2024 ka, or for entire financial year 24-25 ka, what is the maximum time available for him was 30th September 2025 for the payment of the tax. Okay. Now, if supplier had not paid the tax, then you have to reverse the ITC by 30th November. By 30th November, you have to reverse the ITC. Next one, to avail ITC, recipient must file the GSTR 3B. Okay. So, these are the total 6 conditions. I repeat, there are total 6 conditions. First we have started that no, a registered person, if he had procured any goods or services with an intention for using in the course or furtherance of business, he can avail ITC. Okay, but what 16 subsection 2 is saying, you can avail ITC. Okay, good, but you have to satisfy some conditions to avail ITC. First one, you should have some tax paying document in your possession. Next one, the details of invoice debit note should be furnished by the supplier. And the third one, it should get reflected in first one, tax paying document. Second one should be furnished by the supplier and it should get reflected in 2B. Third one, registered person has actually received the goods or services, and the fourth condition was ITC communicated under section 38 should not have been restricted. Okay, and the fifth one was, what was the fifth condition? The fifth condition was tax has been actually paid to the government, and the last condition was recipient must file GSTR 3B. If these 6 conditions are satisfied, then you can avail ITC. Okay, next move on to section 16 subsection 3. What section 16 subsection 3 is saying? If registered person has claimed depreciation, on the tax component along with the cost, okay, ITC cannot be availed. I will explain this with a very simple example. For example, a registered person is there. A registered person has purchased a machinery for rupees 10 lakhs. And the GST they have paid was at the rate of 18%. It means how much GST they have paid? 1,80,000. Now, whenever they have purchased this machinery, while recording the entry in the books of accounts, they are having two options. One option is machinery account debit 10 lakhs, input CGST 90,000, input SGST 90,000, and to creditor 11,80,000. In this scenario, if you observe, the tax amount has not been capitalized to the machinery account. Okay, the other way of accounting it was 11,80,000 to machinery account and to supplier account 11,80,000. In this scenario, the tax component was capitalized. Now what GST Act is saying that either, see, if you are following this approach, that is tax component was not capitalized, then you can avail ITC. No sir, I have already capitalized the tax component, then don't ask ITC, because you will get a depreciation benefit on this entire 11,80,000. Income tax depreciation benefit you will get on entire 11,80,000. If you want ITC benefit, then don't capitalize the tax portion. No, I don't want ITC, but I want the depreciation benefit on the tax component. Then capitalize the tax component. Okay. No, I want both the things. I will capitalize and as well as I will take ITC. No, that is not allowed. That is restricted under section 16 subsection 3. That is what it is saying. Okay. Next one, 16 subsection 4. Time limit to avail ITC. Now, what is the maximum time limit to avail ITC? Now, the maximum time limit to avail ITC was earliest of 30th November of the succeeding financial year or the date of filing of annual return, that is GSTR 9, whichever is earlier. It means for financial year 24-25, the maximum time limit will be 30th November 2025 or maximum, what is the last date permitted to file you for the annual return, that is 31st December 2025. So earliest of these two dates will become the maximum time limit allowed for you to avail ITC under section 16 subsection 4 of the CGST Act. Next one, section 16 subsection 6 of the CGST Act. What is the section 16 subsection 6? Time limit in case of cancellation of registration. Just now we have discussed about 16 subsection 4 ka time limit. Okay. Now sometimes what can happen was, due to non-filing of the returns, continuous not filing of returns, my registration got cancelled. Now, meantime, what I have done, after my registration got cancelled, I have filed all my pending returns and I have applied for revocation. Okay, I have applied for revocation. So, the moment I have applied for revocation, sorry, one second, there is a problem, one second. Okay, I hope it is clear now. Okay, right. Okay, we are discussing this 16 subsection 6, right? So 16 subsection 6, what it is saying, time limit in case of cancellation of registration. So what it is saying, if a taxpayer or registered person registration was cancelled, the registered person cannot file the returns during such cancellation. See, during your cancellation you cannot file returns. See, when your registration is under suspension stage, you can file the returns. Once the registration got cancelled, you cannot file the return during that cancellation period. Excuse me. However, you have applied for the revocation of cancellation and your registration got revoked. Once your registration got revoked, the problem was the time limit given under section 16 subsection 4 has been expired. Okay. Now, because of this cancellation itself, you cannot file the return. So in meantime, the 16/4 time limit has been expired. Now in such scenario, what I have to do? Now what relief department is providing that in this regard, 16 subsection 6 is saying that the time limit to avail ITC is extended until the date of filing of such return. Until the date of filing of such return, if the returns are filed within 30 days of revocation. If you are filing your returns within 30 days of revocation, then you are permitted to your time limit got extended. Example, I will give you one example so that it would be easy for you to understand. What example I can give was 24-25 financial year. Okay, so your registration in the period of 1st October to 15th December, your registration was under cancellation. In meantime, what will come? In meantime, 30th November will come. Earliest of 30th November or 31st December, na? So 30th November already expired. Okay, now your registration got revoked on 15th December. From this 15th December, if you are filing that returns within 30 days, from the date of revocation is 15th December, na? So within 30 days from this date of revocation, if you are filing the returns, then even though your 16/4 time limit got expired, you will be getting an additional extended benefit provided you are filing the pending returns within 30 days. Okay, so that's it. Next, for RCM supplies received from unregistered person, if you have received any supplies which are getting taxed under RCM, okay, RCM again, supplies getting covered under RCM, again there can be two categories: supplier registered, supplier unregistered. We are specifically covering a scenario of a supplier is unregistered person. The time limit under section 16 subsection 4 will be barred on the date of invoice but not on the time of supply. So you should calculate this from the date of invoice. In other words, for an RCM supply getting covered under section 31 subsection 3 clause F, time of supply is March 2024. Time of supply in the sense when they have supplied the service. But the date of invoice was Jan 2025. In such scenario, 16/4 time limit to be calculated will be 30th November 2025 but not 30th November 2024. Simply speaking, so the moment when I have issued the invoice, see, I have issued the invoice in the financial year 24-25. Actually, I have supplied in 23-24. But when I have issued the invoice was issued in 24-25. Thereby, the 30th November relating to 24-25 will be applicable, but not the 30th November related to 23-24. Because date of invoice will be the criteria here. Okay, the 16/4 time limit I have to check from the financial year in which I have issued the invoice, not from the financial year in which actually the supply had done. Okay, mind it, this is applicable only in a scenario where the supplier is an unregistered person and the services getting covered. The supplies are getting covered under RCM. Okay. Next one, section 17 subsection 1. Goods or services are both used by registered person partly for business purpose and partly for other purposes. So in the above scenario, ITC is allowed only to the extent it is attributable to the business purpose. Next one, goods or services are both used by the business person, registered person, partly for taxable and exempt supply. What will be? Obviously, ITC is allowed only to the extent it is attributable to the taxable supplies. Now, the important note point here was taxable supplies include zero rated supplies. In other words, ITC is fully availed on goods and services used for making zero rated supply. Zero rated supply is different from exempt supply. If you are using both for taxable as well as exempt supply, then proportionate ITC only you will get. But if it is for zero rated supply, that doesn't make any change. So the moment you are using that inputs for zero rated supply, full ITC is eligible. Okay, so by this I'll end this video. This is ITC quick revision part 1. Okay, so I hope you like this video. Okay, so